So Donald Trump called out Canada this morning publicly, personally, and aggressively, a series of social media attacks and an unscripted press gaggle on the White House South Lawn in which he accused Mark Carney of being ungrateful, threatened the most severe economic measures ever imposed on a so-called ally, and essentially dared Canada to respond. Mark Carney responded within hours, not with words, with actions. A devastating three-layer counterstrike, a public dismantling of Trump's claims with specific economic data, an immediate set of targeted economic measures hitting Trump's political base in 6 states, and a coordinated endorsement from 5 allied nations that landed within 90 minutes of Carney's address. By the time Wall Street closed, the markets had delivered their verdict. Carney won, and it wasn't close. But the real story isn't the policies or the market reaction. The real story is what this exchange revealed about the two leaders. One came with insults, the other came with a plan. One improvised at a press gaggle at 8 inches the morning. The other deployed a preloaded response package that had been war-gamed, coordinated with allies, and calibrated to inflict maximum political damage at minimum economic cost. This wasn't a fair fight. This was impulse versus preparation. And preparation won in straight sets. Warren Buffett's assessment of this exchange was the most pointed commentary on leadership he has delivered in the entire trade conflict. What he said about the difference between leaders who react and leaders who anticipate, and what that difference costs a country in credibility and market confidence and international standing, is something every voter needs to hear. Subscribe now. Here's how the day unfolded. At 6:30 a.m. Eastern, a pre-recorded interview with Mark Carney aired on Canadian morning television. Segments were picked up immediately by American cable networks. In the interview, Carney calmly discussed Canada's trade diversification progress, the new agreements with the EU, Japan, and the UK, the energy infrastructure under construction on both coasts, the allied partnerships that have reshaped Canada's economic architecture over the past 2 years. It was measured, professional, and entirely routine for a prime minister updating the public on economic policy. Then Carney said the line that changed the day. Canada's economic future is no longer hostage to the decisions of any single trading partner. We have built a resilient, diversified, sovereign economy, and we did it in less than 2 years. Hostage. Single trading partner. The words were calibrated to describe reality. But Trump read them as a direct personal insult. He heard, "You don't matter to us anymore," and he reacted exactly the way Carney's team predicted he would. At 7:15 a.m., Trump started posting 6 posts in 45 minutes, each one angrier and less coherent than the last. The first called Carney the most UN-grateful leader of any country and declared that Canada would be nothing without America. The second accused Canada of ripping off the United States for decades and expressed outrage that its PM would go on TV to brag about it. The third threatened the most severe economic measures ever imposed on a so-called ally, a threat with no specifics and no parameters, the kind of open-ended commitment that constrains the person making it far more than the person receiving it. The 4th, 5th, and 6th posts devolved into personal attacks on Carney. His Goldman Sachs background, globalist banker, his years running the Bank of England. He's not even really Canadian. His economic record, Canada's economy, is a disaster. 6 posts, 45 minutes, 0 policy specifics, 0 coordination with advisors, 0 consultation with the economic team, the trade policy staff, or the diplomatic corps, pure impulse, channeled through a phone at 7 a.m. on a Tuesday morning. And each post backed the president further into a corner because every public threat demands a follow-through. And none of these threats had been vetted by the people who would need to execute them. At 8 a.m., Trump stopped for cameras on the White House South Lawn before departing for an event. He amplified the social media attacks on live television, adding 3 specific threats that his own advisors reportedly learned about by watching the broadcast: potential banking restrictions on Canadian financial institutions operating in the United States, an energy import freeze on Canadian crude oil, and possible initiation of USMCA withdrawal proceedings. 3 specific economic threats made on camera to the entire world. None of them discussed with the economic team beforehand, none reviewed for legal feasibility, none assessed for market impact, unintended consequences or retaliatory exposure. An economic advisor was visible in the background, reportedly on the phone within seconds, attempting to determine whether the president's improvised commitments were even legally executable. The trap was set, and Trump had set it on himself. By making specific threats publicly on camera, he committed himself to positions that would be devastating to walk back weakness and devastating to follow through on self-harm. The only question was how Canada would respond. And the answer, when it came 4.5 hours later, revealed something that changes how we should understand this entire trade conflict. From 8 a.m. to 12:30 p.m., Carney said nothing. 4.5 hours of silence. The media speculated feverishly. Pundits debated whether Carney was scrambling to formulate a response or whether Canada was too frightened to engage. Trump allies celebrated. He's afraid to respond. Canada knows it's outmatched. Carney is hiding. Conservative commentators declared victory by noon. They were reading the silence exactly wrong. Carney wasn't deliberating. He was activating. The response package had been prepared weeks earlier. One of several pre-built counterstrike protocols that Carney's team had designed for exactly this kind of provocation. The 4.5-hour window wasn't decision time, it was verification time, confirming that Allied leaders' statements were finalized, verifying that the economic countermeasures were legally activated, and calibrating the timing so that Carney's response would land after markets had priced Trump's threats, but before the trading day ended, maximizing the market impact of the counterstrike. The silence wasn't hesitation, it was staging. And at 12:30 p.m., the stage was set. Carney delivered a 5-minute address from the floor of Canada's Parliament. Calm, measured, data-heavy, the rhetorical opposite of Trump's morning in every conceivable dimension. Where Trump had shouted, Carney spoke quietly. Where Trump had insulted, Carney cited statistics. Where Trump had improvised, Carney read from a document that had clearly been through multiple drafts, legal review, and economic verification. He dismantled each of Trump's 3 threats with specific data delivered without raising his voice, without a single personal attack, and without a trace of the emotional volatility that had characterized the presidential performance 6 hours earlier. On the banking restrictions threat, Carney deployed the kind of precise financial analysis that only a former central banker could deliver extemporaneously, though of course it wasn't extemporaneous at all. Canadian financial institutions, he noted, hold $2.4, $4 trillion in global assets, and process over $600 billion in cross-border transactions annually. Canadian banks are not peripheral players in the American financial system. They are embedded in it, providing liquidity, processing transactions, financing trade, underwriting commercial lending across dozens of American states. Restricting their operations wouldn't punish Canada. It would disrupt American lending markets, mortgage origination pipelines, and cross-border commercial transactions at a scale that would cause more damage to American financial stability than to Canadian. He invited the president to consult his own banking regulators, the Federal Reserve, the OC, the FDIC, before making promises his financial system could not survive. The invitation was polite. The implication was devastating on the energy import freeze threat. Carney cited 3 independent energy analysts by name, lending the projection the weight of professional consensus rather than partisan argument. Their estimate freezing Canadian crude imports would raise American gasoline prices by approximately 1.4 per gallon within 30 days. 60% of American crude imports come from Canada. American refineries, particularly the massive complexes in the Midwest and along the Gulf Coast, were designed, built, and calibrated specifically for Canadian heavy crude. Switching to alternative grades requires billions in capital investment and years of infrastructure modification. The alternatives are more expensive, less reliable, geopolitically riskier, and months to years away from replacing the volume the Canadian pipelines deliver daily. Carney encouraged the president to explain that arithmetic to American consumers filling their tanks in Iowa, in Ohio, in Pennsylvania, in states that determine elections on the USMCA withdrawal threat. Carney's legal team had pre-prepared a constitutional analysis that they released simultaneously with the address. The analysis demonstrated with citations to the agreement's text, to congressional authority precedent, and to executive power limitations that USMCA withdrawal requires 6 months formal notice and cannot be executed without congressional involvement. It cannot be accomplished by executive order, by social media post, or by impromptu statement on the White House lawn. Carney suggested with the barest trace of a smile that the president might wish to consult the text of the agreement he himself signed. Numbers, data, legal analysis. Every response was substance, because numbers in a trade war are more devastating than adjectives. You can argue with an insult, you can shout over a threat. You cannot argue with a spreadsheet. And Carney had brought the spreadsheet. But the data dismantling was only layer one. It won the argument. Layer two, which arrived simultaneously, was designed not to win arguments, but to inflict political pain. The kind of pain that makes phone lines ring in congressional offices and forces internal pressure on the White House from its own coalition. At 12:45 p.m., as Carney was still speaking, Canada activated a set of targeted economic countermeasures that had been preloaded into the system and were waiting for exactly this trigger. Not broad tariffs that would hurt Canadian consumers alongside American ones. Not sweeping restrictions that could be framed as disproportionate surgical measures designed with the precision of a campaign strategist who has studied American political geography at the county level and knows exactly where pressure produces results. First, immediate suspension of potash export facilitation to 6 American agricultural states: Iowa, Nebraska, Kansas, Indiana, Missouri, and Ohio. Canada supplies approximately 30% of the world's potash, the essential fertilizer without which American agriculture cannot function at industrial scale. Corn, soybeans, wheat, the crops that feed the country and drive the export economy of the heartland, all depend on potash application during planting season. The suspension was timed precisely for the pre-planting window, when potash demand peaks, when stockpiles are being deployed, and when alternative sources are functionally unavailable at the volumes required. The 6 states were not selected randomly. They are agricultural heartland states. They have significant Republican representation at the federal level. Their senators face re-election pressure from farming constituencies who will feel the potash restriction not as an abstract trade dispute, but as a direct, tangible dollars and bushels threat to their planting season and their livelihoods. Second formal notice to 3 major pipeline operators that capacity allocation reviews would be initiated with priority shifting toward Pacific and Atlantic export commitments over U.S.-bound flows. This was not an announcement of future planning. This was an operational signal that the energy redirection everyone had been discussing as a long-term strategy was becoming a near-term reality. American refineries depended on Canadian crude, and there are dozens of them across the Midwest and Gulf Coast, faced immediate actionable uncertainty about their supply continuity. Refinery operators who planned purchasing months in advance suddenly faced a variable they couldn't model how much Canadian crude would be available next quarter. Third, Canadian pension funds and institutional investors received accelerated government guidance to continue and deepen the sovereign risk diversification process. The organized, systematic redirection of Canadian institutional capital from concentrated American holdings toward diversified global positions. Over $400 billion in stable, patient, long-term capital that American financial markets depend on for depth, liquidity, and stability. Capital that anchors bond markets, supports real estate valuations, and provides the institutional backbone of equity markets, now moving faster toward London, Tokyo, Frankfurt, and Sydney. Every measure targeted a constituency that Trump needs. Agricultural states that vote Republican, energy-dependent communities that anchor Republican coalition politics, financial markets whose stability affects every American's retirement account and home value, and every measure was designed to create not generalized pain, but specific, attributable, politically consequential pressure in districts where Republican office holders would feel it immediately and personally. Carney didn't retaliate broadly. He retaliated precisely, and the precision was the message. We know exactly where it hurts. We can calibrate the pressure to the pound per square inch, and we had the measures loaded and ready before you woke up this morning. The difference between retaliation and strategy is targeting. Retaliation hits the other side. Strategy hits the other side's voters. Then layer 3 landed. Within 90 minutes of Carney's address, 5 allied leaders issued public statements. The UK called Canada's response measured and the American provocation counterproductive. Japan reaffirmed its binding commitments with Canada. The EU invoked the principle that trade disputes should be resolved through dialogue, not threats. Australia reaffirmed its strategic partnership with Canada. South Korea expressed serious concern about unprovoked economic threats against allied nations. 5 statements, 5 allied nations, 90 minutes. That kind of coordination does not happen spontaneously. It does not happen in real time. It happens when allied leaders have been briefed in advance, have approved their statements weeks earlier, and are waiting for a signal to release them. Carney's team had called those governments before Trump's call out and said, when this happens, and it will happen, here is what we need from you. And when it happened, the coalition responded exactly as planned. The call out that was supposed to isolate Canada instead isolated America. Trump challenged one country and found himself criticized by 6. Trump thought he was starting a fight. He was walking into an ambush. Carney had been waiting for this call out, had identified the scenario, built the response package, coordinated the allies, loaded the economic countermeasures, and calibrated the timing. The only thing he needed from Trump was the trigger, and Trump, right on schedule, provided it. Impulse showed up at 7:15 a.m. with a phone and a grievance. Preparation had been sitting at the table for weeks, and then Buffett delivered the verdict, and it was in its quiet, methodical way the most devastating assessment of presidential competence that Warren Buffett has offered in a career spanning 7 decades of commentary on American leadership and 70 years of evaluating companies and leaders. Buffett said, I've learned one thing that applies to every business, every investment, every partnership, and every negotiation. Preparation is the single most reliable indicator of competence. It is the thing I look for before anything else. Before charisma, before confidence, before track record, preparation. When a CEO walks into an earnings call with answers ready for questions that haven't been asked yet, when I can see that they've anticipated the concerns, modeled the scenarios, and prepared the data, I invest. When a CEO walks in and improvises when they respond to difficult questions with bluster rather than substance, I sell. That principle has guided every significant investment decision I've made. And the same principle applies with even greater force to leaders of nations. What I watched today was one leader improvise and another leader prepare, and the outcome was entirely predictable because the outcome is always the same. It has been the same in every boardroom, every negotiation, and every confrontation I witnessed in 7 decades. Preparation wins, always without exception. The president made 3 specific economic threats on live television this morning. I want people to understand the gravity of what that means. These were not casual suggestions. These were public commitments made by the leader of the world's largest economy on camera, broadcast globally, to specific economic actions against a major trading partner and ally. And none of them, not a single one, had been assessed by his economic team before he said them. None had been reviewed for legal feasibility. None had been modeled for their impact on American markets, American consumers, or American financial stability. One of them, the USMCA withdrawal threat, isn't even within the president's unilateral legal authority. He cannot do what he promised to do, and he apparently didn't know that when he promised to do it. Meanwhile, Canada's prime minister responded with a pre-built counterstrike that addressed each threat with verified economic data, activated targeted economic measures that had been warmed and preloaded, and coordinated 5 allied nations to issue supporting statements within 90 minutes of the response. That level of diplomatic coordination takes weeks of preparation. You cannot get 5 heads of state to issue calibrated public statements in under 2 hours without having secured their agreement, finalized their language, and arranged the timing well in advance. It means Carney's team had identified this exact scenario, a public provocation followed by specific impulsive threats, had built the complete response package, had secured the allied commitments, and had prepositioned every element to deploy within hours of the trigger. One leader woke up angry and started posting at 7:15 a.m. The other leader had been planning for this moment for weeks. The market read the difference instantly, and the market, in my considerable experience, is almost always right about competence. It is the most honest evaluator of leadership that exists. On the market's verdict specifically, Buffett was precise. Markets are the most honest judges in the world. They don't have political affiliations. They don't carry water for either party. They don't have loyalty to any leader or any country. They assess competence and they price it. That's all they do. Today, they assess two leaders in real time across a 1-2 hour window with complete information about what each one said and did. One leader was priced as a risk factor, a source of unpredictability and impulsivity that destabilizes markets, undermines confidence, and makes long-term planning impossible. The other leader was priced as an asset, a source of strategic clarity, diplomatic competence, and operational preparedness that stabilizes expectations and rewards patient investment. The market knows the difference between a leader and a performer, between governance and theater. Today, the market made its assessment clear, and the assessment is reflected in every price movement from this morning's open to this afternoon's close. What concerns me most, Buffett continued, is not this specific exchange, but what it reveals structurally about how the world's largest economy is being governed. When the leader of the United States makes policy by social media post, when specific consequential market-moving economic threats against allied nations are formulated on impulse without the input of the people who understand their implications and broadcast to the world before anyone in the administration has had a chance to assess whether they're even legally executable, the country's credibility as a serious negotiating partner suffers damage that extends far beyond a single news cycle. Not just with Canada, with every country, with every investor, with every institution anywhere in the world that needs to trust that American commitments are considered, reviewed, and reliable. Carney's preparation didn't just win the day. It exposed, in the most public and undeniable way possible, the absence of preparation on the other side. And that exposure is now visible to every foreign ministry, every sovereign wealth fund, and every multinational corporation making decisions about where to invest, where to partner, and whom to trust. By close of trading, the market had rendered its judgment in numbers that admitted no ambiguity and no alternative interpretation. The Canadian dollar strengthened against the U.S. dollar, ending the day higher, despite the morning's initial sell-off, a reversal that tracked almost precisely to the moment Carney began speaking at 12:30 p.m. The morning volatility caused by Trump's threats was erased within an hour of the counterstrike. By 3 p.m., the Canadian dollar was trading at its strongest level against the greenback in 6 weeks. Traders weren't guessing, they were pricing competence. American agricultural futures spiked in the 6 states targeted by potash restrictions. Corn futures rose sharply as planting season fertilizer supply became uncertain. Soybean futures followed. Wheat futures climbed in Iowa, Nebraska, Kansas, Indiana, Missouri, and Ohio. The 6 states Carney had identified and targeted. Commodity traders were already modeling reduced yields, higher input costs, and compressed margins for the upcoming growing season. The Potash restriction hadn't physically prevented a single shipment yet, but the market doesn't wait for physical reality. It prices expectation, and the expectation was pain. Energy stocks fell across the board on the pipeline redirection notice. Refinery operators with significant Canadian crude exposure, Marathon Petroleum, Valero, Phillips Zeisenzettig, and others saw their share prices decline as analysts modeled the implications of capacity allocation reviews that could reduce their access to the specific crude grade their facilities were built to process. The energy sector, which had already been volatile throughout the trade war, priced in a new and unwelcome variable, the possibility that Canadian crude, which had always been assumed to be available as a matter of geographic and economic inevitability, might not be available at current volumes indefinitely. American financial stocks softened on the institutional capital outflow acceleration guidance. Banks, asset managers, and financial services companies that benefit from deep liquid markets supported by stable institutional capital face the prospect of $400 billion in patient long-term Canadian investment being systematically redirected to other financial centers over the coming months and years. The S&P 500 closed down for the day with trade-sensitive sectors leading the decline and defensive positions strengthening as investors sought safety. The market judged the exchange in real time on the merits with complete information, and the verdict was unambiguous. The call out hurt America more than it hurt Canada. The counterstrike landed on every target Carney aimed at. The provocation backfired comprehensively. Trump's afternoon was silenced. After dominating the morning news cycle with 6 posts and a combative press gaggle, the White House went completely dark after Carney's response. No follow-up post, no press briefing, no clarification, no escalation, no attempt to counter the data Carney had deployed or to respond to the allied statements that continued arriving throughout the afternoon. Advisors were reportedly in damage control mode, conducting an urgent assessment of which of the morning's 3 threats were legally executable, what the market and economic consequences of implementation would be, and how to walk back specific on-camera commitments to a global audience without appearing to retreat. The morning had been loud, the afternoon was silent, and in diplomacy, silence after a provocation you initiated is not strategic patience. It's the sound of a team discovering that their leader made promises they cannot keep, threats they cannot execute, and commitments that their own legal and economic advisors are telling them would be catastrophic to follow through on. Republican senators from the 6 targeted agricultural states didn't wait long to make their concerns known. Iowa senators issued a joint statement calling for immediate dialogue to resolve agricultural supply disruptions, language that conspicuously avoided defending the president's morning provocation and instead focused on the consequences the counterstrike had created for their constituents. Nebraska senator requested an emergency briefing from the USDA on potash supply alternatives and availability. Ohio senator facing a re-election campaign in 2026 requested a full briefing on the trade implications of this morning's exchange, which in the coded language of congressional communication translates to, "What just happened? Why weren't we consulted beforehand? And how do we fix this before my farmers start calling my office?" Kansas congressional delegation convened an emergency meeting with the state's agricultural commissioner. Indiana's governor issued a statement expressing concern about supply chain stability for our agricultural producers. Missouri senators requested a private meeting with the trade policy team, reportedly to express behind closed doors the frustration that they couldn't express publicly without breaking with the president. Carney's targeting worked exactly as designed. Within hours of the counterstrike, Republican office holders from coast to heartland were calling the White House not to rally behind the trade war, but to demand that the White House fix the damage the morning's impulsive call-out had caused to their states, their farmers, and their political prospects. The political cost of the improvisation landed precisely where Carney intended, on the desks of the people who have the leverage to pressure Trump to de-escalate, and those people were pressing that leverage before the sun set. Diplomats and foreign policy analysts worldwide drew immediate and lasting conclusions from the 1-2-hour exchange. The speed and sophistication of Carney's response elevated Canada's international standing to a degree that years of conventional diplomacy could not have achieved, demonstrating a level of strategic competence, allied coordination, and operational readiness that repositioned Canada from a middle power reacting to American pressure to a serious, formidable geopolitical actor with an alliance-backed strategic playbook that the world's largest economy couldn't match. The impulsiveness of Trump's provocation, by contrast, reinforced every concern about American reliability, American predictability, and American leadership quality that the trade war had already created, and that every allied capital had already been quietly discussing. Every government in the world just witnessed a 1-2-hour case study in leadership under pressure. One leader reacted in real time, emotionally, publicly, and without visible coordination, issuing sweeping economic threats through social media and improvised remarks that left his own administration scrambling to interpret, assess, and contain the fallout. The other leader responded with discipline, deploying a calibrated, pre-structured strategy that unfolded with the precision of a rehearsed operation, backed by data, legal analysis, and allied alignment. The international community did not need commentary to draw its conclusions. It watched the contrast unfold live. That morning, Donald Trump moved quickly and forcefully. 6 posts in 45 minutes. 3 specific economic threats issued on camera. Public commitments made before legal feasibility, market modeling, or diplomatic consequences appeared to be fully assessed. In doing so, he constrained himself, creating positions that would be politically costly to retreat from and economically risky to execute. By midday, Mark Carney responded not with rhetoric, but with structure. Each threat was addressed with precise economic data. Targeted countermeasures were activated with surgical focus on politically sensitive regions